Welcome back, my fellow dividend investors. It's me, ET, and remember, I'm not a financial advisor. I'm not your financial advisor. I'm just a self-taught investor who's always looking for ways to increase one's net worth by way of passive incomes, and in this case, dividends. Now, we closed out December 2021 with 25 dividend checks. 25 golden eggs paid out to us in the month of December. Now that was pretty good. And we're probably on track for 2022 to average a little bit over $300 per month in dividend payments. But you know what? I think it's time for me to get aggressive. I need to think of a way to accelerate and increase my monthly dividend payments. Have an idea in mind. But before we talk about that idea, let's talk about the dividends paid out in December. My fellow dividend investors, we all need to heed the word of Warren Buffett. He said, if we don't find a way to make money while we're asleep, we'll work till we die. That's why we buy companies that pay dividends. Let's take a look at the dividends payout for the month of December 2021. Now, this here is a summary sheet for my Charles Schwab Roth account. It shows that in the month of December, it paid me out a total of 25 payouts in the amount of $286.87. But also it showed that this is how we closed out 2021. Received a total of $3,590.93. That averaged out to $299.24. If we go over here and take a look at the next 12 months, we see that the projected next 12 months, the average is going to go up to $304.75. Annually, we should bring in $3657.01. Now, one of my goals for 2022 is by the end of 2022, when I hit this next 12 months projections, I want to see this amount, the average monthly amount, to be at least $400. And I'll talk to you about what my game plan is to achieve that particular goal. I have three reasons why I like dividend stocks. Number one is for the income. It's truly passive income that's paid to us by way of dividend payments. The second one is through increases. We're looking at capital appreciation, but also dividend increases. And the third way is through growth. And the growth is going to happen through the dividend reinvestment program. If you have that available on your whatever trading platform that you use, make sure that you turn it on. Excellent way to take advantage of compounding and exponential growth. Now, for the month of December, I bought 475 additional shares of IVR, Invesco Mortgage Capital. That brings me to a total of 1,800 shares. This company pays out quarterly dividends of 9 cents per share and has an annual rate of 11%. Now, this is my game plan to drastically increase my monthly income from dividends, to move it up to at least $400 per month. What I want to do, my goal for 2022 is this here. I want to increase my total position in Invesco Mortgage Capital to 5,000 shares. Hitting 5,000 shares, even if the dividend stays the same at 9%, that'll take me well over $400 per month. I believe that IVR, Invesco Mortgage Capital, has huge upside potential for massive capital appreciation and dividend increases. That's why I want to drastically increase my position in this company. Now, I did a video explaining why I believe and have such high conviction when it comes to IVR. The link is in the description below, and also it'll be at the end of this video. Now, in December, I didn't sell any stocks, but here are my rules for selling. If they cut the dividend and nothing drastically happened across the market, yeah, I'm gonna more than likely sell them and replace them. If I get a 20% loss on my initial investment, and if I'm writing a covered call on it and it's exercised away from me, I have no choice but to get rid of it. And, or if I decide to use that I can there's a better use for that capital, I'll sell it and get into something else. This here is my tracking sheet. This here shows all 25 companies that paid out in the month of December. If we go across the top here, of course, the ticker symbol for that, the current price at the time of the recording, my share count within those particular holdings, the payouts for the month of December. And as you can see, 25 payouts, 286.87. The annual yield, the current market value. The current market value is nothing more than my share count times the current price of the stock. That is the current market value. Here, it goes over the cost basis, what I paid for this stock. It does not include drips. That is separate. I mean, I do not include that when it comes into my cost basis. And these sections here is profit and loss based upon my cost basis. This is the dollar amount and the percentage amount, all centered around my cost basis. Now, if you look blaringly, you have four companies here that are highlighted in red. And the reason why, those are very, very risky companies here. This one here is a REIT. It's a two leverage REIT company. Very, very risky play. This one here, REML, that there is also a REIT, but this one here is an ETN, Exchange Traded Note. Those are very, very, very risky. I would not recommend that to anyone. I'm just trying it out. I don't know if I'm going to stay with them for the long term. The next one that we have here is SLVO. This one here tracks silver, SLV. And this one here is also an ETN, Exchange Traded Note, which are very, very risky. And then we have USOI. USOI tracks the US Oil Fund, which is USO. And this one here writes cover calls on it, and it's also an ETN. I'm experimenting with those and see how it works out. Now, also what you'll notice here, if anything is highlighted, if the font is in red all the way across, that means that I am down. It's trading less than my initial cost basis. All right, here's the current value. There's my cost basis. I'm underwater by $3.50 on this one here, which is 3%. And this is what I use here. The loss section is what I use to determine whether or not I'm going to sell a position. Remember, if it hits 20%, I'm gone. And so here is the actual payouts here. Some of the big payouts that I had for the month of December was Bank of America paid me out $70.40. I had let's see, Chai 24.42, GOF $50. You had PSAC $69. You had QYLD 11.93. And then you can come all the way down here. You also had SPHD, which is that S&P 500, was it high yield, low volatility dividend play. That it paid me $7.20. And then ExxonMobil paid $5.36, and everything else was below those. So if you want to take a look at that, just go ahead and pause it. You can go ahead and study it. This next one here is nothing more than just a quick summary of my December payouts. I call it my December portfolio dashboard. I have a total of 34 dividend paying stocks, and in the month of December, 25 of those 34 paid out for a total of 286.87. My cost basis for those 25 stocks was $25,586.87. The current value is $44,000. Now, If you take the current value from what my cost basis is, we've got capital appreciation of $19,376.21. That equates to a 76% return on investment. Now, if we take a look at the dividend yield, I like to break it out in two sections. One based upon my cost basis. My cost basis is 25,000, paid me 286. That's 13%. The current value is at 8%. So there you have it. We're able to close out 2021 with a hair short of $3,600 paid out for the year. Now, we talked about increasing the monthly dividend payouts. And one of the ways that I'm going to do that is by accumulating 5,000 shares of IVR, currently at 1,800. So I got quite a bit to go by the end of this year. I think that by doing that, that's going to increase our monthly dividend payouts to average over $400 per month. Time will tell whether or not it's really going to work. We'll see how this all pans out. So with that, guys, I will see you on the very next video when we start talking about the payouts for January 2022. And always remember, guys, that we need to save, invest, apply what we know, because knowledge is not power. It's the application of knowledge that's power. And also, one last thing before I let you go. Hit that like, subscribe, and notification button. That'll help out the channel. You guys take care. I'll see you on the next dividend update video. Take care. Bye-bye.